Hey there, it's Bill with Smart Trades. It's Friday, April 29th, about 12:10 p.m. Pacific time, and let's jump right into the S&P 500 hourly chart here. Obviously, the market has taken out that 1344 high. At that time, I did try to post a comment on in the comment section of the last video, and also on Twitter, that indeed I didn't think that we were peaking there. Obviously, the 1344 target was wrong. At this point, we're at the next resistance, which I've mentioned before, at 1365. There's a variety of calculations that come in there, but on the short term, we've got what looks to be a wedge type pattern, possibly a terminal wedge, and perhaps more important, we have divergences on breadth ratios as we head into that area. We need to roll over here to confirm a top, but nonetheless, I think that there's a pretty good possibility we're going to get at least some kind of reaction from the 1365 area. We shall see. A rally through 1367 would probably prove me wrong. Here's the longer term picture. This is the S&P weekly, and this is my favored count is that we're in a wave B of a wave 4, and that said, there's another possibility is that this is a fifth wave, and indeed 1 equals 5 comes in around the 1365, 1367 area. That said, we do not have 5 waves up to this point, so to my way of thinking, it's unlikely that this is a fifth wave, or if it is a fifth wave, it's unlikely that it's terminating up here. That said, there are other indications. We had an extreme ADX reading, and from there we've dropped off as we've made this new high. That's consistent with a topping process, which may take some time to develop, but nonetheless, I do think that we're into a top rather than an acceleration. Also, 38% of wave 3 also targets that area around 1365. Now, here is another count. This is an extremely bullish count in that we haven't even finished off our third wave yet. Now, is it possible that this is in play? It is. Again, I don't favor it for a variety of reasons, not the least of which it just seems that if this is indeed a fifth wave, it has so much further to go. So I prefer the idea that this is, again, a B wave peak. And here's a little bit more detail on that. Again, there's our third wave, my primary count here, ABC of A, ABC of B. And B waves are notoriously fickle in terms of predicting how they're going to work out. And obviously, we've taken out that recent high. So if indeed this is a B wave, it's obviously an expanded flat rather than a regular flat. The implication of that, ironically, is more bearish for C. C could actually go a little bit lower than I had previously looked at, but let's take that one step at a time. Let's see if indeed we're going to peak here. And again, here's those breadth divergences on the daily chart. Pretty severe, and generally speaking, when you see this, at minimum you get a bit of sideways movement. Oftentimes you get a more substantial correction. Time will tell. Again, 1365 is key, and if we take off through about 1367, I'm probably wrong, and the next resistance, which I've mentioned before, comes in around 1380. Also, 1.27 times A. By the way, 1.272 is the reciprocal of 0.786. 0.786 is the square root of 0.618. I notice a lot of folks using different numbers there, but for Fibonacci ratios, but 0.786 and 1.272 are the correct ratios to use beyond 0.618 and 1.618. And that targets also, again, that 1365 area, give or take a couple of points. Now here's that alternate count. That wave 4 bottomed, and this is a 1, 2, and that we're into a third wave up. it's not consistent with the breadth ratios and the momentum here. And if indeed it is a third wave, we've got substantially higher to go. But as always, we'll take it one step at a time. I favor a peak around 1365. Now, the fly in the ointment here, and everybody talks about this, is the dollar. And whether it's manipulated or not manipulated, obviously the Fed has a lot to do with what happens with the dollar and also our national debt and so on and so forth. But the bottom line is that on a monthly chart, you can make a case here that this entire decline from 2009 or so is a corrective pattern, and it's due to bottom here. We've got momentum divergences on the low. However, as you look out to a weekly chart, the ADX is heading straight up at this point. That's not consistent with a bottom here, even though, again, we do have some targets here, and a case can be made that the pattern may be terminating here, and that indeed it's a corrective decline. So when I see a pattern like this, what I want to see is some kind of confirmation that we're reversing. And to this point, I wouldn't be buying the dollar unless I had it break back above this trend line, retest the trend line from above. There's also a swing point here around the 74.50 area. I'd want to see a reversal through there before I thought about buying the dollar. And it's also obviously important to watch the dollar in terms of the stock market. At some point they may decouple here, but it hasn't happened yet, and the weak dollar is obviously supporting stocks. Shifting gears a bit, here's the natural gas chart. If you'll remember, we were looking for a bottom around that 410 area. Obviously, it's rallied from there. And at this point, if I were long, I would be raising stops on at least part of the position to break even, and on the other portion, perhaps half of it, up to around the perhaps 449 area. And this chart is a bit dated. We've actually rallied from here. And finally, crude oil. Now, crude has a much better example than the dollar of a diagonal triangle. One of the key factors in a diagonal triangle is that it's losing momentum. And as you can see here, the volume, the ADX, and price itself. I mean, you can clearly see price is starting to struggle. I have a target around 117. It's not clear to me we're going to get there. That said, I would watch an extension of these channels for crude oil. If we were to break down below this lower channel, that's a pretty good indication that we've got at least a short-term top in. On the other hand, if we were to blast above this upper channel, I'm probably wrong about the diagonal triangle and the peak, and we may have an acceleration to the upside. But as it stands right now, you've got a nice diagonal triangle type pattern. I've mentioned this before in crude, and it seems to be playing out pretty well. So as always, one step at a time, but let's look for that 117 area, or a breakdown of that channel, which right now is down around 110 or so. But that's going to be a moving target. At any rate, hope you had a great week, and have a great weekend ahead. Thank you so much for watching. Bye-bye.